Salam everybody, this is Investor Shake back at it again with another video. Another reminder of the giveaway, link is at the top of the video. Today's Halal Stock Pick of the Week is Apple, ticker symbol AAPL. Stock price is at $167.23. And Apple is one of the most common stocks in the stock market, probably one of the most popular stocks in the stock market, because everyone knows what Apple is. They make iPhones, MacBooks, and they have other apps as well, such as Apple Music, Apple TV, iTunes, etc. It's a massive company. And as you see here, it is Sharia compliant on Zoya. In prior years, it was questionable given the fact that it's a huge company and that there may be some minor things that may make the stock questionable for halal investors. But after looking at the 2021 10K, the scholars have determined that Apple stock is Sharia compliant. And I have indirectly covered Apple in a lot of my videos, as it is a major holding in both SPUS and the Wahid Invest ETF HLAL, as it is the top holding in both of those halal ETFs. But I'm talking about it as an individual stock, which I haven't done in a while. And the key stats are it has a $2.73 trillion market cap, very massive, an annual dividend of 88 cents per share. A 52-week low is 121.73 and the high is 182.71. PE ratio is, in the middle at 27.17, and the earnings per share is $6.02. And let's skim through the description. Apple is an American multinational technology company headquartered in Cupertino, California, that designs, develops, and sells consumer electronics, computer software, and online services. It's considered one of the big 5 companies in the US. Its hardware products include the iPhone smartphone, Apple, the iPad tablet, computer, the Mac, iPod, Apple Watch, Apple TV, AirPods, AirPod Max, and the HomePod smart speaker line. Apple's software includes iOS, iPad iOS, Mac OS, Watch OS, tvOS operating systems, the iTunes, media player, Safari web browser, Shazam, and iLife, iWork, and then Final Cut Pro, Logic Pro, Xcode, App Store, Apple Arcade, Apple Music, Apple TV, iMessage, and iCloud. Other services include the Apple Store, Genius Bar, Apple Care, Apple Pay Cash, and Apple Card. It was founded by Steve Jobs, Steve Wozniak, and Ronald Wayne in April of '76 to develop and sell Wozniak's Apple I personal computer. Though Wayne sold his share back within 12 days, it was incorporated as Apple Computer Inc. in January '77, and sales of his computers, including the Apple I and Apple II, grew quickly. So Apple has a really large history behind itself. And as you see here, they offer hardware and software. So over the years, it has grown from selling the OG Apple I computer to all of these products. It's amazing what can happen in a little over 40 years. And Steve Jobs is probably one of my favorite CEOs, given the history behind Apple and what he has contributed. And it's kind of crazy how he was one of the earliest CEOs to get fired from his own company, which, if you think about it, is kind of insane. But I highly suggest looking at the Steve Jobs biography film, because it just makes a lot of sense because of his demeanor and who he is as a person. But given how much he has contributed to the Apple brand, he will be remembered as one of the greatest CEOs to ever exist in the tech industry. And then let's take a look at the stock price. So it's at $167.23. But if we were to zoom out, 5 years ago, it was at $36. But if you zoom out even further, you can see the company has grown over 130,000% from its inception in 1977. And you're probably wondering, was it possible to get Apple stock at 13 cents in 1986? And the answer is no, because over the years, Apple stock has had multiple stock splits given how expensive the stock has grown. And with stock splits, the company has decided to split the stock to make it more affordable for investors. But it doesn't really affect the actual stock price. But as you see here, it has had a general uptrend over the past 4 years. Whether this will continue, I don't know. So look at the key stats. The dividend yield is 0.53%, which is fairly small, but given the fact that this company has grown, I would consider it more of a growth stock as opposed to it being a dividend stock. Because a lot of tech stocks, they don't really pay much of a dividend, but Apple's one of those few that does, because they have a large cash flow. And with that excess cash, they decide to give it back to the shareholders. So if you're holding onto Apple stock for 10 or 20 years, you have made a lot of money over time. Although I can't guarantee that will be the case, because this company is already massive as it is, at almost $3 trillion in market cap. But given the inflation of the US dollar, I do expect this company to be a $5 trillion or even a $10 trillion company in the next 10 or 20 years, assuming we don't have a Great Depression like we did 100 years ago. And given the fact that Apple produces various products every single year, such as the iPhone, every year they come up with a new iPhone and everyone keeps buying that. So I don't know when people are going to stop buying iPhones, unless something really bad happens, but I highly doubt that. So let's take a look at the financials. So as you see here, the revenue is growing year after year, with 2021 having a significant boost compared to previous years, and they have positive earnings year after year. And then the quarterly, as you see here, positive revenue and positive earnings each quarter. So this company is really making a lot of money and is a very successful company. I would say that this is a blue chip stock, which you don't really attribute that to a lot of tech stocks, but with Apple, given how massive the company is and how successful it is, they're always cranking out new products, very innovative. And Apple is always the pioneer in terms of technology. When they release a product, other competitors would be copycats and make their own version of that product, such as the iPad. Other companies made their own tablets, and then when Apple released the iPhone, other companies made their own smartphone. And then when Apple made the AirPods, other companies started making their own wireless earbuds, because Apple is the pioneer in modern technology, and it's inspiring a lot of other brands to make their own version of that product, so that they can get a cut of the market share for that particular product. And then let's take a look at what the analysts have to say. So it is between a strong buy and a buy, with price targets as low as $160 and as high as $215. So it's possible that this stock may reach $200 within the next year or two. I mean, given the fact that this stock had a stock split back in 2020, it was a 4-to-1 stock split. So if you had Apple stock in 2020, that one share became 4 shares. But given the fact that this company has had multiple stock splits, if you had one share of Apple in 1980, it may have become like 8,000 shares. Just that one share. So in a way, yeah, Apple stock is expensive at the current moment, but you have to look at the company in the long term. Are they going to produce new iPhones, new MacBooks, new services, completely new products? That's something that you have to take a look at. and decide for yourself if you want to invest in this company. And then lastly, let's take a look at the financials. Net income, look at that, $100 billion in net income. That's amazing. That is really amazing. But of course, it is a massive company, so it kind of makes sense that this company would be making this much in profit. And it would also explain why they have a pretty healthy dividend. I don't expect them to cut the dividend anytime soon because everyone's buying iPhones, a high demand, and Apple is meeting that supply, which is really good. Unlike a lot of other growth companies, electric cars. And then looking at the balance sheet, the assets are at $351 billion and the liabilities are at $287 billion. So the assets is slightly greater than the liabilities, which is really good. And then their long-term debt is $109 billion. Now, of course, a lot of American companies are going to have debt because that debt will be used to invest into the company. And then as the company grows, that debt could eventually get paid off. Luckily, Apple does have, pretty healthy profits, so the debt is manageable. So it's not underwater such as a lot of other growth stocks. So all in all, Apple stock is quite honestly a pretty safe stock in the tech industry, and I would expect it to grow in the long term. I currently do have a position in Apple in my Roth IRA and my taxable account, as well as indirectly investing in it through ETFs such as QQQ, SPUS, HLAL, etc. So, as always, I'm not a financial advisor, so please don't buy Apple stock simply because I'm talking about it. Please do your own research. Take a look at the 10Qs, the earnings reports, and take a look at and watch some of the investor videos regarding Apple stock to become more knowledgeable about this company before you put your money into it. This is Investor Sheikh checking out. Remember, the giveaway ends on April 30th. So if you want that $10 Amazon gift card, take a look at that video that I posted a couple weeks back and do those 3 things: subscribe, like, and comment.